Welcome to the Pacesetter Pod, where we explore and reveal the perspectives, insights, and approaches to deliver great results and growth in your agribusiness through better execution. Here's your host, the Integration Pacesetter, Joe Mosier.
Welcome, Pacesetters of Agribusiness, to another episode of the Pacesetter Pod, where we amplify voices from across the agricultural industry, aggregate those perspectives, and elevate our collective thinking around strategy execution. I'm your host, Joe Mosier, and I'm thrilled that you chose to spend your time with us today. Today's guest, Bobby Martens, is the Executive Director for the Iowa Institute for Cooperatives, a state-level organization that has been working to support and enable the growth and prosperity for Iowa cooperatives since 1951. Now, as Executive Director, Bobby is responsible for enhancing the success of member cooperatives through business engagement, legislative advocacy, and education and training. And with over 25 years of experience in supply chain management, and actually 19 years as a faculty member at the Iowa State University, Bobby has a strong record of working with companies across the agricultural sector and a great guest here today. Now, the reasons that I wanted to sit down with Bobby, which are the same reasons that I'm excited to share the conversation with you today, are twofold. One, Bobby talks with a lot of cooperative boards and leadership teams and helps them through things like strategic planning, effective decision-making, and creating the conditions for success, as well as creating high-performing boards, which are not just needs in the state of Iowa, but really across the ag co-op system. And we talk about them here all the time on this show, and I think that we really benefit from learning from someone like Bobby with his broad exposure to cooperatives within the state of Iowa. And secondly, I think it's a great reminder of the really strong and committed organizations distributed throughout the country, state-level cooperative councils, regional and national groups that are all doing really important work to support a growing and profitable cooperative system as well as a larger agricultural supply chain system. We all know they're out there. We all know they're working on many of the same challenges that we face, but I wonder if we're efficient enough in reaching out for help when we need it, even when we don't think they have a solution, but maybe they benefit from knowing that problem exists. So a really great conversation, highly relevant to the conditions that cooperatives are facing today and some strategies for perhaps overcoming them, and really just benefiting from the perspective of somebody who spends a lot of time talking with a lot of different operators across the industry. And I'm happy to have a chance to share it with you today. Now, a quick reminder before today's episode, please be sure to like and subscribe to the show wherever you get your podcasts. It's the best way to make sure you never miss an episode. And if you're so inclined, I would love it if you would consider leaving us a review at the end of today's show and let us know how we're doing. You can also always DM me through LinkedIn or drop a message on our website. Let us know what's working, what's not working, what do you want to hear more of, less of. It's one of the best ways that we can improve the show and make sure we're delivering value back to you in your agribusiness. So thanks as always for joining. And with that, here's my conversation with Bobby Martens of the Iowa Institute for Cooperatives. Bobby Martens, welcome to the Pacesetter Pod.
Thank you, Joe. I appreciate being able to be here.
Yeah, it's been a long time coming, and excited to get your perspectives and share them with our listeners today, particularly the very focused and dedicated work that you do with cooperatives. And we'll talk about that a bit later. But let's jump right in. Something that we talk about a lot and everyone's talking about is the conditions that we're all operating under right now in the agricultural economy are challenging, but they're persistently difficult for multi-line co-ops or diversified co-ops over the last several growing cycles across much of the United States. But even in a deteriorating economic environment, not every agribusiness performance trend line is going to follow the same trajectory, right? And so we've seen some cooperatives print some pretty attractive patronage numbers at the end of the year. We've seen some other ones that are really struggling, bordering on distress. So the pain is not equally distributed, I guess is the way of putting it. You speak with a lot of co-op management teams and a lot of boards of directors. How would you summarize or characterize the main prevailing challenges that ag co-ops are facing? And then as a second part of that question, what's setting apart those co-ops that are really outperforming the sector and their peers?
Yeah, that's for sure. It's really became more and more apparent this past earnings season of what the differences are in earnings, where local savings fill in, what's happening. And one of the things that I can say clearly is that Bigger isn't necessarily better. Better is better. And, it's a line that's used often, but I think we're seeing this through this earnings season. Many big co-ops did fine. Many really small co-ops did fine, but many more in both of those areas had a very difficult financial year, meaning negative local savings for many of them, negative overall savings for some of them. Member equity has been erased over this last year across the state of Iowa and around other parts of the nation as well. Kind of interesting when you think about it. I think one of the things that has happened since, inflation took off in 2020 is that cost side of the income statement has really grown. Those costs across the board have really grown. Many of those costs are hard to be able to manage, which, what do you do about that? Well, you drive gross margin at the front of the income statement. So those that are in a position to be able to drive that gross margin have been in better places. And honestly, I think that goes back to decisions that have been made for 10 years. It's not a one-year decision that puts them in a position to be able to do that.
On the cost side, let's get a little bit more granular. Are there specific, when we think about the enduring structural challenges that are impacting the majority of the co-ops, and of course you're focused within the state of Iowa, is it primarily labor? Is it cost of inputs? Is it energy? Is there any particular line item on the fixed or variable lines that really jump out as this has been the persistently difficult cost to get out from under?
Yeah, that's the interesting thing right now is if it was one, I think we could work at it, right? It really seems to be across the board from insurance, right? Interest expense, clearly money has higher value now, even though that's not historically high, it's much higher than we have operated for a long time. Personnel costs are high. These are still highly intensively relationship businesses that we're in. Those personnel costs are critical. We've seen those labor rates go up so much. So, I think that's really the challenge on the cost side is that it truly is across the board. And when you do that without changing your gross margin, that's going to make savings suffer in a big way.
And on the gross margin side, then, so on the revenue side of the ledger, you talked about how the activities and results we're seeing, they're a long time coming. Maybe talk to us a bit more about that. My mind goes towards, is that either, folks that have gone heavy into a specific vertical, meaning our precision agriculture and agronomy services, precision application and agronomy services are our growth engine versus a custom blending operation? Is it a type of division do you think is driving most gross margin, or is it actually the underwriting operating discipline of the co-ops? A bit of both. Kind of what are you seeing where you say the seeds have been planted a number of years ago and they're now bearing fruit here in the middle of the trough?
Yeah, I think that, when you look at that space and you think about the gross margin space, it's how do you maintain per unit margin? How do you increase sales, right? And increasing sales without maintaining per unit margin is really difficult to do. Many would argue that that's the geography that you're in and it's the competition that you're surrounded by. And I think that there's some validity to that. I think, though, thinking about strategic positioning of where co-ops have put themselves, what areas they want to be in, how they sought out growth or didn't. And a big piece is where did they deploy assets and where did they not deploy assets? And were those assets really, so CapEx, where was that CapEx spending over the last 10 years put in place in a way that cooperatives were very fiscally responsible with what they were spending and planning for a longer term horizon? I'll tell you that kind of the little example that I like to use is if you sit around the boardroom and you say, okay, we're going to do something with that location because that's director A's location versus director B's location that's on the side, you can end up with some hodgepodge assets put in place that maybe aren't going to return us as much as we want, maybe are difficult to run operationally, that maybe actually aren't even serving the members as a whole as well as one might wish. And I think that that's a great example. Those could be grain assets, it could be agronomy assets, it could be feed mills, whatever that is. So that's one example, I think, of being disciplined in the boardroom to be able to line up fiscal responsibility with strategy of where you want to be, how you want to be able to be laid out into the future.
And what I'm hearing there too is your capital strategy and the way you deploy that CapEx anchoring it in your underlying strategy of these are the growth verticals that we think that we are uniquely positioned to win. These are where the increased sales and per unit margin can be defended, and doing that in a way that's, again, tied back to the strategy, not necessarily to making sure that every district gets their share of capital. And that sounds a bit maybe contrary to the cooperative spirit, where you're trying to widely distribute and share the prosperity. But sometimes you can create more prosperity by maybe spending less capital or spending it in fewer places. You're seeing a bit of that sort of that cultural inertia around, well, we haven't done anything in District 3 for the last 5 years. We got to spend some money, even if it doesn't, I mean, if we're being honest, doesn't really pencil.
Yeah, I think that that's where that's more strategic conversation in the boardrooms, where that's happened and where that's been really accepted has been good because you said the words, Joe. I mean, you said, where are we going to be able to win? And if you're going to build capabilities where you can win, likely those are the areas that you're going to be able to protect your gross margin the best. You're going to be able to drive that top line gross margin, even if you're not controlling your other costs necessarily as much as you wish you could, right? You're able to keep that top line much stronger. And there's, of course, you can find and you can go in and you can find a location where, well, this crush facility came in next door to us and that's going to hurt us. Of course, you're going to be able to find those. So there's going to be some specifics that you can find. But overall, that longer term strategy with financial discipline that goes along with the strategy, where are you going to invest, where you're not going to invest. We're asset intensive in this entire space. We're going to remain asset intensive in this entire space. So how do we deploy our CapEx to be able to meet those assets? And what does that come back to? I mean, that comes back to your operational efficiencies, your ability to be able to truly serve those members where you're able to generate profit, gross margin, ultimately profit, and your ability to be able to grow the cooperative as a whole.
Well, a lot of this is, I mean, as you just alluded to a few moments ago, it comes back to decisions that are taken in the boardroom, right? And I, for one, I think that perhaps we've overstated as an industry the challenge of working with farmer-owned boards. There's this old adage that, it's really hard to get the board member to take his farmer hat off when he comes into the room and put his board member hat on. I see less and less of that over time. And frankly, I think cooperatives are uniquely positioned where you actually do have your customers and your owners who can speak, for the market. Now, how wide that lens is for the market, if it's them and their neighbor or their entire district, varies by board member. But that's a unique value that the cooperatives have. But then at the end of the day, as you said, a lot of this comes down to the strength of the decision making, and oftentimes that's the strength of governance, which is, of course, the strength and performance of the board in and unto itself. So this is nothing new, but I think it's getting a lot more attention because we're also seeing this generational transition, right? Where in the last couple of weeks, I sat with a co-op at their annual retreat, and was really quite taken aback or quite surprised that I suddenly didn't feel like the youngest guy in the room for the first time. I thought, well, I've gone through this period of time where there's a couple of my peers, but now I'm looking around saying, well, there's a couple of guys that they're probably 10 years my junior. This is probably more about me and my age, but we're seeing this generational transition, and I think it's actually accelerating in many of the co-ops we work with. All that to be said, that puts more and more pressure on training up, skilling up, strong boards, strong governance, all the things that are necessary to actually produce good strategic decisions. It's not just the management team, it has to be a strong board as well. Again, based on the work that you're doing with cooperative boards, break it down for us. What would you say are the markers of a strong board of directors within an Iowa cooperative?
Yeah, according to Iowa code and Minnesota code and code of almost every state that you would go and look at co-op code, it's really clear that a board is responsible for managing all aspects of the cooperative. Now, I think one of the things that any board member has to struggle with is, what does that mean for success? I think that clearly means a level of oversight into what's going on. Now, the typical thing that we'd say there is, well, that doesn't mean micromanaging. Well, how do you really sort that out? And I think oversight is important to understand what's going on. And I like to call it with operational excellence. Is the cooperative continuing to operate with excellence? Are they able to execute the things that they need to do in an excellent way? That's not doing it as a board member. That's having some kind of oversight to be able to think about what are the measurements around that. So I think that's number one. I think that we can't forget about that. I think operational excellence in our cooperative space is essential to being profitable, to be serving the members, to be able to do all the things we need to do. Okay. So if that's 90% of the ticket or 80% of the ticket, I don't know, you could argue what that is. The other portion of that is being able to be strategically positioned to win, right? And that's what you said before. And some people would say, well, does a cooperative need to win? He absolutely needs to win. Here in Iowa, you go back 20 years ago and we had almost 200 cooperatives, right? Today, we're looking at 40 grain and farm supply cooperatives in the state. That means that some cooperatives won and others didn't win, right? So, and many of them have been merged together. And there's many reasons for that. It's not necessarily just winning, but if you can position yourself to win, that means that those board members need to be in front of the proverbial puck, right? You got to be in front of this to be able to skate to where the puck's going, not to where you're currently at. And I think that's one of the biggest challenges for board members to be able to start wrapping their minds around. I think that those two things in alignment, right? Oversight to be able to recognize and make sure operational excellence is happening, along with the strategic direction of where the cooperative should be going, and having that aligned with your CEO or general manager are two critical functions. And ultimately, that's where a strong board comes in.
Do you think, if we look back over the arc of history, and let's take the last, I don't know, let's call it 30 years, right? Through the last couple of super cycles, this is something that's always been true, right? Cooperatives always benefited from strong governance, a board's ability to operate at the right level, validate the strategy, not design the strategy, but validate that it's the right strategy, stress test it with questions and scrutiny. And then, as you said, look at operational excellence. Are we focused in the right areas? Are we driving the right improvements? Are we building the right durable capabilities? That's always been true, but is it more needed now because of the state of the industry? Is it more needed now because of the pace of change that we're undergoing and the volatility? Or has it always been like this? And this is just the fallacy of looking at what the most recent history is and saying, well, this time it feels different, but it's actually always been true.
I think there's a couple things that do make it more challenging today. I have a slide that I love showing. It's this graph that shows the rate of change, right? And the rate of change is increasing today compared to where it has been before. And there's many people that really get into this from an academic perspective to be able to say, okay, well, what's a human's ability to be able to absorb change as it's happening? And most people who study this would say change is happening faster than any one person's ability to be able to absorb it. That means we need systems to be able to absorb that kind of change. So we no longer have the general manager who's at a 3 location facility, right? Who can really understand that change that's coming and be ahead of that change. You rely on experts from all kinds of different areas to be able to come together. These cooperatives, not all, but many, have many locations, right? Here in Iowa, we have many cooperatives that are over $1 billion in sales and growing, right? Those become super complex organizations. So I think that alone, the rate of change and the complexity and size of the organizations makes it harder for someone to come onto the board of directors and be able to wrap their minds around everything that's going on, right? So I think the strategic piece of that and the oversight piece of it means that we should rely on systems and processes to be able to help us put those together. And again, I think that what makes it more difficult today is that you can't necessarily come in as the smartest person in the room and think that you're going to know and understand the totality of what's happening within a cooperative today. You have to come in and rely on many different people and then make decisions about strategy where you don't know what the outcome is going to be in 3 or 5 years, but it is where you believe it is critical to be moving, right? And I think that is more difficult today. I don't think we're just talking about something. I think you go back years ago when maybe one of your largest co-ops was 10 locations. I think what you were doing was more homogeneous to all your neighbors. Today, I think there's a level of change that is happening where some might be positioning themselves to win very differently than others.
Well, it's actually interesting. So I'm going to reverse engineer what you just said there. So you're talking about we no longer have an environment where somebody can come in and unilaterally by themselves identify, diagnose, and then solve a set of problems for the co-op. They're simply too complex. So where the market was fragmented, and everybody's jobs a little bit, market was fragmented and the rate of change was slower, you could kind of see around corners at a localized level. Well, now as the market has consolidated, the complexity is taken in-house, concurrent with the exponential growth and the rate of change. So now it outruns people's ability to do these things. In some ways, though, if you can actually harness that as an operating principle for your cooperative and say, look, we know that there's no one person that can solve this. And maybe I'm being Pollyannish here, but that actually removes a key man risk, because that old co-op who had the GM there for 25 years, who just knew how to solve things, if that individual, for whatever reason, wasn't able to come to work anymore, voluntarily or involuntarily, you may have this huge gap. Now you're basically spreading the risk among multiple people. So as to your point, it's the systems and processes that can sustain it. And I think also you make a very important point there too, Bobby, about you're making strategic bets, investments, taking decisions today for an uncertain future. And trying to get to the point where you have whittled away all the uncertainty such that you know for sure that this is the right decision probably means you're moving too late. And it's a decision many other people have already taken, right? So you've missed the window of opportunity. And so I don't think strategic decision-making is about precision as much as it is making informed bets about the future, knowing that they're not going to be perfectly right. You just need to be more right than the people around you, right? Or the competitors around you. Let's flip this a little bit. And I'm going to be a little bit general in my language here, but if you're a co-op GM or CEO and you have historically not had a strong board, meaning not providing strong governance and oversight, maybe not challenging your strategies and decisions as heavily as they probably should, not because you're a lousy GM, just because that's their job, right? It can create a lot of risk for the co-op if you're wrong, because you've lost that key governance sort of lever. But it can also make the job, quote unquote, a little bit easier in the near term, because you simply don't, this what structurally should be this 20-person committee that is your boss is not really functioning as your boss. Really, they're looking to you to make the decisions, looking you to guide them. When you shift to having as we're talking about a high functioning, high performing board of directors, what's the trade-off for a management team and for a GM? Because you're inviting scrutiny, you're inviting skepticism, you're inviting accountability, but you're also getting a lot more firepower at the table. So kind of talk through, if you're a GM listening today and you're thinking, yeah, my board they're not quite where I need them to be. What would they expect on their side? What's the good and the bad of strong governance if you're sitting in the GM's chair?
Right. I think for those cooperatives that I work with that have had a strong manager in place for years, that has really done some things, really has a strategic mind, has been able to put together teams of people that execute super, super well. It's very easy for the boards to become yes boards. And in those cases, that's okay probably for them. I don't think it's ideal, but is it okay? Yeah, they're functioning super well because they have this, very good leader who is 1 in a 10,000, right? Or 1 in 1,000,
Yep.
a very rare individual that has that ability to be able to have foresight, to be able to run the operation and be able to take the cooperative someplace. And I don't think that's unhealthy whatsoever. I think when that becomes really scary to me, though, is when that same board goes to hire a new CEO, when someone decides it's finally time and I'm going to retire, or, the world puts its twists and turns in front of us and something else happens, right? I think that's when that's when I get nervous for those boards, because they likely don't have the types of oversight in place to be able to think about what oversight is needed with this new CEO, right? The other thing is that it's probably very hard for that board to come in and communicate to the CEO what the strategy has been that they have operated on for the last 20 years with this really strong manager. And I think that finding a really strong manager like that, who is going to be able to take the co-op awesome places twice in a row, 3 times in a row, is a very rare thing to have happen. right? So I think that it becomes really important for that board to be ready through the hiring process to describe who they are, what they are, where they're going, what their strategy is, how they're planning to win. And if the new CEO coming in, a new general manager coming in has that, it's going to make it a lot easier for them to execute it. One of the most difficult things I think for a CEO coming in that maybe isn't one of those 1 in 1,000 people, but they're 1 in 500 people, so still very good, talented person, is to come into a situation where the board isn't really too sure what they should be, right? And there's some wishy-washiness, and maybe you got a couple people on staff that you're inheriting that thinks you should be going one direction and not the other direction, or should be more traditional and maybe not as progressive, all those kinds of things. And that CEO really can get in a tough position, I think, when that happens, because the board isn't strong enough to be able to say, yes, this is the direction we want to move. This is the direction that we have been moving. This aligns with where we want to go. We are ahead of the puck, so to speak, right? And I think that that's when it becomes a bigger issue. So I think even those boards that have a very strong CEO, where the co-op is doing very, very well, you're moving things forward, I think that's the time they should be thinking about, well, what does oversight really mean here? Are we as a board just saying yes and nodding our heads when something comes to us because it's very easy to agree? Or are we really a essential part of thinking about the strategic direction that's happening in the cooperative? Are we really doing what we should be doing? Another way to be able to think about it, if someone were to come in and really take this place off the tracks, how quick could we as a board recognize that we are leaving the tracks that we think we should be on? So I think that goes to the strength of a board. And I think sometimes really strong leadership can create boards that aren't in the position that they maybe would want to be in when leadership changes.
Poorly executed mergers and acquisitions destroy more value than they create. They can set your company back years. To defend your firm's position in the marketplace, you need access to the leading practices that unlock the greater potential of your people, processes, and systems. If you are undertaking a company transformation or pursuing an acquisition as a vehicle to grow, set up a call with Joe by visiting www.moshercg.com.
Well, it's sort of an amplified dependency risk issue where if you've enjoyed the luxury of incredibly strong, strategic, systems thinking leadership among the management ranks, if you've enjoyed that luxury that has actually taken the heat off of the board needing to provide their governance, satisfy their governance obligations, that creates that sort of long tail risk that echoes over time where, yeah, as you said, the ability to articulate strategy, the ability to identify risk, the ability to be aligned, it follows that individual unless that 1 in 1,000 leader or 1 in 10,000 leader is also a 1 in 10,000 leader identifying their own successor. And sometimes that happens, sometimes it less so. And I think a couple of things here. So we've worked with cooperatives that are looking at the dual challenge of opportunities to merge and consolidate as a vehicle to grow and to achieve some efficiencies, achieve some scale, do many of the things we talked about here around, increasing sales and defending per unit margins. But they've also been saying, look, this is happening concurrently with us having a succession challenge around what does the next CEO look like? Now, to be clear, I don't think pursuing a merger as a way to solve a succession problem is ever the right strategy. That's a very expensive one-way door to jump through. The merger may still make sense, but don't just do it to avoid making a hiring decision. But spending some time talking about, okay, what does the future of the cooperative need to look like? And what are the behaviors and the skills and characteristics that the future leader would require? And not in the context of a job description, but talking about it almost as a profile. Things like, does this person actually, do we want someone who's come from the cooperative system, or is agribusiness experience sufficient? What type of leadership background do they need? What sort of other sort of professional experiences, demonstrated results do they require? What's the cultural values? How do they approach competition? Because we're in this unique industry where your competitors one day are your partners tomorrow in fulfilling trades and executing the business. And so I think you often need to start with the profile. And what this is all spelling or tipping into is legacy. So if you're the 1 in a 10,000 GM that's been able to sit in that chair for 10, 20, 30 years, you've kind of allowed the board to put their feet up because you're such a strong performer. That's great. But that body of work, if it's not enduring after you leave, is all at risk. And this is now talking about legacy, right? And what is legacy? Legacy is having impact when you're not there to do the work. And I think everybody wants to have a legacy of success and growth and sort of enduring contributions. And so something else I'd like to get your point of view on here is if we go down a level of the governance hierarchy, if you will, let's shift from the boardroom to the executive ranks. We are, just like I talked about the board turning over, the executive teams and the GMs of the large and mid-sized, even smaller co-ops are turning over as well. What are you observing in terms of the investments and the readiness to groom and develop those successors to fill these seats within the cooperatives? Within the state of Iowa, are the co-ops acting on this challenge and cultivating that next generation of talent? Or is there some deficiencies in the system and we're looking at a rough patch ahead?
Yeah, I think that it's a little bit like the board member coming into a larger, faster changing space. And I think that leadership is in a larger, faster changing space as well. Go back not too many years, 20 years ago, and that's when most of our leaders today were growing up in the organizations, right? That's when they were learning through hard knocks or through whatever program they might be in to be able to go through it. Now, what was a larger co-op in Iowa, at least at that time? 10 locations, 8 locations. Again, you can really wrap your mind around that. And then they're a piece of every one of those mergers that have been through afterwards. And we still have, in Iowa, we have 11 single location cooperatives of our 40. That's awesome, right? I think that's neat. I think that the fact that they can be successful at that is wonderful. Not every space is going to be. So we also have a lot of much, much larger locations, right? Much, much, much larger cooperatives. So I think that to be a really successful leader of a larger organization where there's many people employed and you're doing it over geographies that are very large and you really need to be leveraging buying opportunities in the agronomy space, right? Merchandising, thinking about merchandising and end users are very different in the grain space than you have before. All of those kinds of things, that takes a very talented individual to be able to do that because they're doing that at a scale that is much larger than ever before and at a depth that's much larger than before, right? It's not simply making this transaction with someone where you're merchandising grain on cue to be able to meet whatever basis level you expect it to when you're doing that, right? So I think the challenge becomes, how do you grow those individuals? If you look outside of this farm gate ag cooperative space, what would an organization do? They would find a rising star and they might send them to work in different areas of the company over time so they can have a much broader perspective of everything that's happening. I think it's hard for our co-ops to do that. I just don't think it lends it to it. Now, at the same time, I hear from boards continuously, and there's validity to it, that hiring leadership from outside of the cooperative is just really hard to do because they don't actually understand the cooperative model as well. And I think what they're saying with that is they don't understand how to keep member owners truly satisfied with service levels that, they need and expect to be able to run. And that's a hard trade-off. But when you start losing those service levels in the cooperative world, you lose business really quick. And I think you lose that gross margin really quickly as well. So when I say that, I think one of the big challenges in the space of developing leaders is, how do you get all those experiences, but still hold on to that tradition that is the cooperative model and respect and understand that? And I don't think it actually lends itself super well to developing that top level of executive that's going to be able to fit both of those. And I think our boards struggle with that. They think, okay, so do we go outside and do we actually hire that from outside the cooperative space? Do we only look from within? If we're only looking from within, what are we doing to make sure we can actually develop someone who has that really serious breadth and depth of knowledge to be able to fill that CEO role. These are big time roles. I put what the CEOs are doing at some of these cooperatives up against any CEO role that's around there. You have to know and be on top of many different things to be in that role. So it's hard to be able to create that internally. And then you have that conflict with the external. So, Joe, I'm not telling any of the listeners here the secret sauce to making this work. I'm describing a really challenging issue that all of our cooperatives across the United States, I think, are facing today.
Yeah, and I'm particularly interested. Thanks for that answer, but particularly interested around the idea of not understanding the cooperative system as characterized by maintaining the service levels that the members require. Can you give some examples to that? And the reason I'm asking, Bobby, is being sort of intentionally skeptical here. If nobody in the market could possibly understand the service levels that are required for a cooperative, does that perhaps challenge our expectations for service levels? And that's why I want to ask what you mean by service levels to better pull that apart. I'm not saying we should provide less service to grower members, but I just want to understand that a bit better, if you don't mind.
Yeah, I think that it particularly comes from boards. What I said, I think, is a bit of a repeat of what boards will often tell me is if they don't understand the cooperative model, if they don't understand that the customer is the owner, service falls apart. And is that completely fair? Is that not fair? Maybe not. If you're running it as a business, is it completely fair? Maybe not. But if nothing else, it's really critical for a cooperative CEO to be able to communicate well with those members and for them to relay to those members that they understand who the owner of the co-op is. I think that that's critical to farmer co-ops that I've been around. If the members feel that the CEO does not recognize who owns the cooperative and who has equity in the cooperative and what the cooperative is meant to do, which is to serve its members, right? I think that they can lose a lot of faith in the CEO or senior leadership very, very quickly. I think it crossed most of agriculture, at least in the Midwest, that if there's someone from outside the ag space, there is a natural skepticism for folks to be able to create as much trust as quickly with those individuals. And I think that that is a barrier, not a barrier. I think that's a challenge for someone coming from outside of the co-op system to be able to create. Maybe that clarifies that. I hope it does a little bit, Joe, for the listeners here.
It does. And I would argue a lack of an agricultural background and a lack of knowledge of the cooperative system, that's a pretty deadly cocktail for succeeding in a high profile, impactful leadership position within the cooperative system. I accept that. But I understand better what you're also saying too, because you need to make sure that leader, if they come from outside the cooperative system, if I'm hearing you correctly, can articulate and recognize we know who we're working for. And while we know who we work for, and our why we exist, we are also an enterprise that needs to be able to be open for business next year. And so there are some trade-offs we're going to make around investments, around particular decisions of maybe hours of operation, of take your pick what the example is. Perhaps the middle ground there is making sure that you can recognize and acknowledge ownership and recognize and sort of bring people into the decision around, we have a couple of imperfect decisions here. We could focus exclusively on service to the detriment of profitability at one extreme, or focus on profitability to the detriment of service. And our job is actually to find what is the right balance between the two, because sometimes they run in tandem. Sometimes they're actually running, in conflict. The best thing you can do during harvest is to run every elevator 24 hours a day. Staffing that may not be in the best interest long-term for patronage and distributions, but yeah, go ahead.
Right. I mean, those examples you can go on with a long, long time, right? I mean, you can start talking, you got the floater, you're going to use that floater hard for 2 weeks. You're going to have people to run that floater, applicators available for 2 weeks. And then what's the utilization of that floater after the big 2 weeks? So I think that there's many, many examples of that. And I think that that's one aspect of creating member value. And I think it's an important aspect. Don't get me wrong. I think what's kind of interesting is looking ahead is maybe the way member value is going to be created more and more is by connecting to global markets better. And maybe that's really thinking about how does a co-op not try to necessarily make their bread and butter off of that margin that they're going to gain by, providing better service in the fall of the year by keeping every door open. And what's that margin look like when you're going out and you're seeking opportunities that are more external to the farm gate through relationships that exist globally sourcing fertilizer, right? Through the relationships of scale that align with the fact that we have a lot more market concentration off the farm gate than in the farm gate, right? Meaning just call out, the big three in ag chem, right? Or seed or whatever that looks like. What do those margin opportunities look like in the supply chain when you think about merchandising very, very differently, or maybe even start thinking about end users a little bit differently? What does it mean to be able to create scarcity in a market with a grain plan where you are seeking to shuttle grain out of the area and create a different level of scarcity that actually can move the basis in a real way? So I think that those are all things, right, that we might typically not think about when we think about service, and selling those and making sure the farmer members understand those is maybe even more difficult because it's not right in front of them every day. But I think all of those are the kinds of things that are really going to be critical to move the needle in an agricultural space that needs to continue to become more and more competitive globally because of global competition. That kind of shifts this a little bit, Joe, maybe. And
No.
but I think that becomes a very different and very real conversation for the point that we are in time.
I mean, that's a great example of, we sometimes hear generally that the cooperative and their ability to pool and aggregate demand for fertilizer and crop protection products, the ability to make investments in application fleet investments that are unavailable to an individual farmer because they can actually generate more acres through that machine and create the efficiency and the better, return on investment. Aggregating the grain to deliver shuttles to export market, whatever it is, right? They do that. But what you just articulated too around market access is you're fundamentally creating the conditions for success where they may not exist absent the co-op. And so I think I don't mean to diminish or dilute the impact of having accommodative hours at harvest. That's really important. Having people that will spray on Sunday morning when that's the break in weather that provides the window to get those fields sprayed, right? Those are all the non-negotiables. But that's meeting more of an immediate, not transactional, but immediate sort of micro localized need. What you're talking about is actually creating conditions for success that actually align the incentives pretty closely, because a co-op creating a scarcity in an otherwise surplus environment creates opportunity for profitability that wouldn't be there otherwise, in which the farmer participates.
Exactly.
And so I think
that's the beautiful thing about the co-op model, right? I think that's what's so interesting about the cooperative model is that maybe for a period of time here, it's been so much about speed and space, which is important, right? And building out assets, and our strategy has been speed and space. And does that help? Yes, that absolutely helps. That creates the opportunity for farmers to be able to merchandise, for farmers to be able to farm more, to be able to do what needs to be done. But I really think that this idea of what are the supply chain opportunities to be able to improve margin back to the cooperative level, which is then shared back to the farmer member, to farmer ownership, right? Becomes a very interesting space that I think probably the opportunities there over the next 10 years are greater than any place else in the cooperative space.
Exciting. So we've covered a lot of ground here today. We've talked about some of the headline challenges facing cooperatives, what's maybe setting some of the cooperatives apart that are doing well. Talked about the role of governance, both why it's important, why we don't always have it, some strategy on how to get it, and then also, of course, strength of leadership, succession planning, and even some of the forward-looking decisions that you can take. And all that is the reason I wanted to have you on the show, Bobby, because you speak to so many cooperatives within the state of Iowa. You that is the role you're focused on. And so maybe it's a good opportunity for us to talk a little bit about the Iowa Institute for Cooperatives. Now, obviously, cooperative members within the state of Iowa are going to be familiar with you all, but you do have sister organizations in other states. And everyone has their own varying degree of programming, frequency of programming, maybe quality of programming. I'm not going to opine on one versus the other, but I do want to make sure that the organizations that we have beyond agribusiness associations at the state level, beyond Farm Bureau, beyond NGFA and some of their associations, many states, particularly those that are rich in cooperatives, do have a state cooperative association, some type of institute, some type of group that's dedicated to helping with a lot of these problems we talked about today. And so maybe can you talk to us about who the Iowa Institute of Cooperatives is, what you all do, and how you bring value to your members?
Yeah, so we believe that we bring value to our members through three key areas, and one is government affairs. So we have a full-time lobbyist that will be in Des Moines for all of session, on top of what's happening in Des Moines, and we also have a contract lobbyist that helps us there as well. So it's really being in front of legislation at the state level. We also team closely with NCSC, AGP, Land O'Lakes, CHS, other organizations to be able to think about policy at the national level. And we frequently end up in DC to be able to think about policy at that level on behalf of our membership here in Iowa. So that's one of our legs, is that whole space. By the way, I think over this past year, the biggest thing I have learned in my professional life is that is more important now today than it has been for a long, long time. Okay, so that's our first important piece of who we are. Second one is we work with our cooperative members, and this, goes into Minnesota as well and some co-ops outside of Iowa a bit, to be able to think about how do we help them develop their people. So we have this year, we will have at least 6 custom programs going. So we'll work directly with cooperatives and their employees, so each cooperative individually, to be able to create management development programs, leadership programs, all sorts of programs like that they bring in-house that enables them to be able to upskill their people and develop the next generation of leadership that is critical in the co-op space like we talked about. Third area that we really focus on is doing things like board retreats, thinking strategy with board members, board member development. So we will do that individually with cooperatives. We do that in groups. We bring people together, and we frequently work with senior leadership and with cooperative board members to be able to think things like strategy, how to move those discussions to strategy, how to think about oversight as well, right? So that's kind of our space that we reside in. We're a relatively small group. There's 4 of us. We have a director of co-op education, a director of government affairs, myself, I'm the executive director, and we have a business manager that works with us. So we take those services out. So the model is similar to other cooperative councils that states have, right, around us. I think of Kansas, Nebraska, South Dakota. There's many of them that are around. There's some regional ones in other parts of the United States. They do good things. I think the thing that we are doing maybe more than those other ones is thinking about the cooperative employee development space that we are in, that education upskilling space. And that's not to say that the other cooperative councils aren't doing more amazing things than us in other spaces. I just think it's been a niche that we've been able to carve out here in Iowa that I think has some value to think about where that could go in other parts of the United States as well.
Yeah, thanks for running us through that. And I think part of the reason I wanted to highlight that, highlight the great work you guys are doing at IIC, but also for our other listeners that are facing some of these challenges around, okay, how am I going to develop, we do have professional development and management training and leadership training requirements for our staff, but we don't really have the mass of people that justifies us certainly not hiring a learning and development specialist, nor even maybe getting a contractor or a consultant to design a program for us. That feels expensive. It feels like we're not quite there yet. And so we're stuck in this middle ground of we need it, but we can't necessarily invest to solve for it. Folks are saying, well, we don't, how do we develop, and it's even appropriate for us to develop ourselves a new board member training program, right? It's a reminder to the folks out there listening to look towards your state councils and associations for that type of programming. If they don't have the programming that you need, the best thing you can do is ask them, not why don't you have it, but perhaps where can I get this, which is an indirect way of highlighting that you might need something that they're not offering. And so I think it's really important to use our resources that are out there, because there are people that are investing in this, and we can learn from one another. And it's part of that cooperative spirit that we pool the need, and then we solve at scale and share that prosperity. And so I thank you for the work that you're doing there.
Joe, if I could just add one thing there, if there's anyone who's out there who's a board member or thinks they're going to be, or their neighbor is, I really, really encourage you to go to some type of director certification program, some type of program that helps directors understand their roles. It's not easy to walk into a boardroom and be able to pick that up. There are things in your state code that create responsibilities for directors. And these aren't responsibilities to scare anyone, but they are responsibilities that should be taken seriously. And, over the last decade or so, I've seen so many times when directors do not know or understand what responsibilities are truly theirs. And if they did, there would have been decisions that would have been made very differently, right? So I just really encourage directors to do that. If you're a director on a cooperative board and you have been elected by members of that cooperative, they put you into a leadership position that does have responsibility associated with it. I believe you're going to get way more out of being a director than what you're going to have to give to being a director. I think that there's so much that directors can get, but I really, really encourage you to think about what the duties and responsibilities are and make sure you take those duties and responsibilities serious as a director.
Certainly no elected director or even an associate director, nor the co-op generally, suffers from directors that have invested too much time in training.
Yeah, for sure.
And so I think there's ROI both in terms of your own professional satisfaction, performance in that role, and the actual benefits that accrue to the cooperative. Well, very good. We are coming up on the end of the time we have today, Bobby. Thank you for carving out time to do this. Again, really admire and respect the work that you all do and the focus you have on supporting a very important component of the overall agricultural supply chain within the United States. The cooperative system, while it's been heavily consolidated compared to where it was 100 years ago, is still still has a variety of participants out there in the marketplace. That creates all sorts of benefits. It also creates a lot of operational and strategic challenges locally for these cooperatives that are, in these fragmented environments. And I think the type of role that you all play is incredibly important. So I'm happy to have a chance to highlight that today, but also to get your perspectives and have you on the show.
Thank you. I appreciate it. I enjoy listening to this show. It's a great show, great guests. I'm honored to be able to be part of it. So thank you, Joe.
Fantastic. You bet, Bobby. And to our listeners, I appreciate you as always being a part of the Pacesetter Pod community and taking the time to listen in, to consider different perspectives that we're sharing, and ultimately decide how do you want to action those ways to improve strategy execution in support of growing your agribusiness. I look forward to having you join us next time right here on the Pacesetter Pod.
This is the podcastfactory.com.